Google didn't just become profitable, it became one of the most consistently cash-generating companies in corporate history. To understand how it turned massive revenue into massive free cash flow, we need to look at how it makes money and how it allocates it. In 2024, Alphabet, Google's parent company, generated about $350 billion in total revenue and converted over 30% of that into operating cash flow. That means Google wasn't just reporting high sales. It turned a huge chunk of those sales into actual cash in the bank. Most companies struggle to convert revenue into profit at all, but Google does it consistently. In fact, nominal free cash flow has topped $80 billion annually in recent years, a level few tech companies ever achieve. This kind of cash gives Google strategic optionality. It can invest, buy back stock, pay employees, and launch new products without relying on external funding. Much of Google's cash generation starts with search advertising. When someone uses Google Search and clicks on an ad, Google collects money directly from the advertiser. In 2024, search ads accounted for well over half of Alphabet's total revenue, and the cost per click remains high because advertisers know they're reaching users with intent, people actively searching for something. That intent creates revenue that's both scalable and sticky. Beyond search, Google expanded into display ads, YouTube monetization, and programmatic advertising. YouTube alone generated more than $36 billion in ad revenue in 2024, making it one of the largest video ad ecosystems in the world. YouTube's combination of long watch time and high engagement makes it an extremely profitable ad platform. Meanwhile, Google Cloud, long a strategic priority, brought in over $45 billion in revenue, turning into a meaningful contributor to total top line, even though it historically operated at lower margins than search. The mix of products matters because diversification spreads risk while preserving scale. Search ads are mature and still generate cash. YouTube and Cloud are younger but growing fast. Combined, they allow Google to maintain overall revenue momentum even if one segment slows. Cost structure also plays a role. While Google spends heavily on data centers, AI research, and infrastructure, its margins remain high compared to traditional companies. Operating margins in 2024 hovered around 26–28% overall, and core advertising segments often exceed that. This means Google doesn't just make a lot of revenue, it keeps a lot of it after costs. Another source of cash is constructive capital allocation. Google has used free cash flow to repurchase shares and return capital to shareholders while also funding long-term bets like AI, quantum computing, and autonomous systems through Waymo. This balance between returning cash and investing for the future is a hallmark of its financial strategy. Data also fuels cash generation. More users mean more search queries, more clicks, more data for better targeting, and better ad prices. This feedback loop is extremely valuable. It creates a moat. The more data Google has, the better its algorithms and ad performance, which in turn attracts more advertisers. Finally, because Google controls both platform and distribution, from Android to Chrome to Maps, it embeds its services across the digital ecosystem. This integration drives usage and keeps ad views and clicks flowing, which in turn keeps cash flowing. Understanding Google's business as a cash engine explains why it remains one of the richest, most influential companies in the world. It's not just big, it's efficient, diversified, and structurally positioned to turn attention into revenue into real cash. Subscribe to Real Business Today for daily, no-fluff breakdowns of business, finance, and how the economy really works behind the scenes.